Welcome back. 2015 was a roller coaster ride for the Indian equity market. The benchmark indices hit all-time highs, commodity prices cooled off, crude prices plummeted, and finally the much anticipated Fed liftoff took place. Not just that, foreign fund flows dried up, turning net sellers, but the domestic funds came to rescue. So did SEBI, which merged FMC with itself, bringing the commodity markets under its purview. So what's in store for 2016? Navin Shetty finds out.
Riding the Modi wave, the Indian stock market stepped into 2015 with huge expectations.
Extreme highs and terrible lows. That is what the year 2015 was for the Indian equity markets. The benchmark indices witnessed extreme volatility, with the Sensex and the Nifty hitting lifetime highs and crossing 30,000 and 9,000 respectively at one point in time. Subsequently, the indices lost steam due to multiple tailwinds. A pity, as the year had begun with a lot of hopes.
By the end of 2015, equity markets disappointed. The Modi premium enjoyed by the markets in 2014 failed to sustain in the backdrop of weak earnings, dismal industrial pickup and foreign fund outflows, falling commodity prices and the parliament deadlock over the key GST reform.
Essentially, I guess the big concern still is growth is the missing element everywhere. So growth is missing in India, but growth is probably a bigger worry outside India. And that, till that comes back, really, what you're playing is hope versus reality. That, okay, we hope that things are getting better, but somewhere every time earnings hits us, the reality is that, okay, this is not really panning out.
2, 1, bingo!
But it wasn't all gloom and doom. The primary market was on a secular uptrend with almost 13,000 crore rupees raised this calendar year. A sprightly jump from the 9,500 crore rupees raised in the last 3 years. And this is likely to get better in 2016 with companies from diverse sectors hitting the bourses. L&T Infotech, Mahanagar Gas, PNB Housing Finance, VLCC Health and Quick Heal are some of them.
A lot of new interesting companies will hit market, and I think that is very good for building the diversity in the market. And I definitely see that more and more good quality companies will hit the market, and especially the companies where private equity investors invested in last 5-6 years, which are ripe for kind of hitting market. So you will see fairly large number of companies trying to raise capital, hit the markets, and I think that will be interesting opportunities as well.
Meanwhile, it was also a watershed year for India's securities market with the much-awaited merger of commodities regulator FMC with SEBI sealed in September. The merger is aimed at streamlining the regulations and curb wild speculations in the commodities market while facilitating further growth and protecting investor interest.
Our effort would be to move in a cautious direction to ensure that we provide some comfort to the market and to all the participants that the way transactions are taking place or going to take place in the commodity futures market are at least as robust as they are in the securities market.
And by December, the US Federal Reserve hiked rates by 25 basis points, thereby beginning the tightening cycle. The Fed observed that future rate hikes would depend on economic growth data. While the Fed liftoff was factored in by emerging markets such as India, the future rate hike may have impact on companies with high foreign debt. That will be a key factor to watch out for in 2016.
I think there's nothing to be too pessimistic about. I think come New Year, there'll be glad tidings again in the Indian market.
As we go along, as we head into next year, I think the fundamentals are reasonably strong to see some positive returns in the next calendar year.
So even if the street was let down in 2015, hopes from 2016 are aplenty. E-IPOs, for starters, will change the way primary market functions. The new listing regulations will bring in a lot more transparency and changes in the way companies disclose information. SEBI will see a new chairman in 2016. While 2015 was a year of net foreign outflows, India's growth will lead to foreign inflows chasing growth in 2016. Let's hope that the bulls, who are battered more often than not in 2015, stage a recovery back in 2016.